Okay. So, welcome to the talk tonight, Climate Change and Your Wallet. I am Dana Nuccitelli, Research Coordinator for Citizens Climate Lobby, and an environmental scientist and a climate journalist. And we also are happy to have Cheri here from SMUD. She's going to talk about incentives that SMUD offers after I'm finished blabbering about my stuff. So, what I'm going to talk about very briefly a summary of what's happening with climate policies in the current Congress, and then how climate change is impacting insurance rates. And then we're going to go into what incentives are available for home electrification and efficiency. So, first, let's start with Congress. There's a few different climate policies that we're hoping to see advanced in the current Congress. An important one is permitting reform because there's lots of clean energy infrastructure waiting to be built that's kind of being held up by a slow permitting process. And so there's kind of bipartisan work on a permitting reform bill to expedite that process so we can get this clean energy built more quickly. And so there's just been kind of some beginning rumblings that some Republicans and some Democrats in Congress want to work on this, but it's going to take some time because first they're very focused on the budget. But hopefully that's coming later this year or maybe next year. Carbon pricing, very important. It's facing some challenging politics right now. Canada had a really good carbon pricing policy in place, and then Mark Carney, who replaced Justin Trudeau, just revoked that, which is very disappointing. So it's yeah, with when there's high prices, it's always difficult to start trying to impose or continuing any kind of taxation. But Europe has a carbon price in place. They're going to implement a carbon border adjustment, which is basically when products are imported into Europe from countries without a carbon price, Europe will apply their carbon price to that. And so that's going to elicit some reactions from other countries, possibly the United States, because also we have President Trump who loves tariffs. And so if we were to implement a carbon tariff, that would kind of be our response to Europe, and it would generate revenue and also reduce climate pollution, which is what we want to see. So I did a whole talk on carbon or tariffs for the climate last Monday. So if you go to YouTube and put in my name, you can go to my YouTube page and see a recording of that one from last week. And the big thing that's happening is that Republicans in Congress are looking to extend the Tax Cut and Jobs Act and maybe cut some other taxes. And so that's going to cost north of $4.5 trillion. And so they're looking for ways to pay for that. And one way to pay for that would be, or to pay for part of it would be to repeal the climate clean energy incentives in the Inflation Reduction Act. The big ones being clean electricity, tax credits, and EV tax credits. But those are pretty popular. They've had a lot of good effects on both emissions and on the economy. Really big benefits, over $2 trillion in total benefits projected to both the economy and to the climate, which you can see in the chart on the right here. I talked about that again a little bit more next week or last week in the carbon tariffs talk. So that's one thing we're working on at CCL is working on convincing Republicans in Congress to preserve as many of those Inflation Reduction Act's tax credits as possible, or at least the most important ones, which are the clean electricity and maybe the EV tax credits. We'll see. So in the Inflation Reduction Act, we had those clean electricity tax credits, which were the most important, responsible for close to half of the bill's emissions cuts, which you can see on the right here, which is a pie chart I put together, averaging together some various modeling efforts of the Inflation Reduction Act, the EV tax credits, a fee on methane pollution, our first federal price on a climate pollutant, some incentives for building electrification and efficiency, which we're going to talk about tonight. That's one of our focuses, and then some natural climate solutions and carbon capture and storage, tax credits, and some other stuff. So we're hoping to preserve as many of those as possible during these budget negotiations that are happening in Congress. Then we have a lot of potential for forest policies. Those tend to have bipartisan interest. The Farm Bill is probably going to be renewed sometime this Congress. It was supposed to be renewed in 2023. and then it just got kicked to 2024, and then it got kicked to 2025. And so we'll see if they have time this year, or maybe they'll kick it to 2026. But at some point, they'll do a new farm bill and hopefully include some good forest policies in there. CCL is also advocating for the Fix Our Forests Act to help expedite wildfire management practices, which is very relevant to what I'll be talking about next. And we're also trying to get some reforestation bills, like something like a trillion trees bill to plant more trees to improve the amount of carbon that our forests are pulling out of the atmosphere. So hopefully we can get some of those passed in this Congress. But let's talk about climate change and insurance next, and then we'll shift to the good building electrification and efficiency stuff. So I wrote a big article about this for Yale Climate Connections in January, that nobody's insurance rates are safe from climate change. In the West, we're seeing wildfires doing all kinds of damages to buildings and infrastructure. In the central part of the country, they're saying worsened hail due to climate change, which is doing a lot of damage to roofs and property. In the southeast, in the Gulf and kind of Atlantic coast, they've got hurricanes getting more powerful and doing more damage to property. And in most of the east part of the country, they're seeing more flooding due to climate change, and that's doing more flooding damages. So pretty much wherever you are, there's some kind of climate worsened extreme weather event that's increasing property damages and thus increasing insurance rates. So a couple examples, we had Hurricane Helene, the flooding from which damaged an estimated 138,000 vehicles and caused tens of billions of dollars in property damage. So it's not just house damage, it's also vehicle damage that climate change is doing. The LA wildfires cost tens of billions of dollars in property damages. PG&E has had to pay tens of billions of dollars in wildfire settlements from the wildfires that their infrastructure sparked, but which were made more likely and damaging due to climate change. And those costs incurred by PG&E has raised their utility bills by over 10% or $24 per month, which folks in SMUDs don't have to worry about, but I'm in West Sacramento, so I'm a PG&E customer, and that hurts my personal wallet. So for my article, I put together this chart because I wanted to see, obviously prices of everything have gone up due to inflation, but I wanted to see how much home and auto insurance prices have gone up compared to inflation. So this is how much more they've gone up than inflation. So I've kind of subtracted inflation from this, and you can see since 2008 when the data here starts, home insurance price increases are in green. Auto insurance price increases are in red. You can see they have risen much faster than the rate of inflation has. There was a bit of a dip here, 2021-ish, when we started to see inflation go really fast, and inflation started to catch up to the rate at which home and auto insurance prices were rising. But now home and insurance auto prices, or home and auto insurance prices have again started to go up faster than the rate of inflation. So it's not just an inflation factor, there's also climate change worsening these damages, increasing these costs, which then get transferred into increasing insurance rates for both homes and automobiles. And one other reason why nobody is safe from these rising insurance rates is that rates are pooled. That's kind of the whole purpose, is you get everybody to buy insurance, and so then everybody kind of pools their money, and then it sort of makes all of us relatively safe from a really large cost. But there was a paper last year that found that growing disaster risk is going to lead climate-exposed households to about $700 higher annual premiums by the 2050s. And even homes not directly impacted are going to pay some of those costs because the insurance costs are pooled and spread around to everybody. And so a good example of that is, like, for example, Oklahoma. They are seeing some increased climate damages from events like worse hail events, but their insurance rates are going up particularly fast because their insurance rates are not very strictly regulated, whereas we in California at least used to have very strictly regulated insurance rates. And so that was kind of causing a problem that insurance companies could not increase their insurance rates to Californians commensurate with the increase in climate risk and climate damages we were facing. And so the insurance companies instead, well, they either tried to leave the California market or they spread those costs across other states in that large pool. And so places like Oklahoma started to see really fast rising insurance rates as a result, which kind of unfair to people in places like Oklahoma that they're incurring and shouldering some of the insurance costs from places like California. But now, because the insurance companies were all starting to leave California, we've now loosened our insurance regulations. And the downside of that is that now insurance rates in California are starting to go up even faster. There are some ways to partially solve this problem. There are state-run insurance programs, like in California, we have the FAIR program that people have probably heard about, which is like the state insurer of last resort. If you have a home in a place where there are no private insurance companies will give you coverage, then you ask the state FAIR program, can you cover my home insurance? And then they give a relatively expensive policy. But there are pros and cons to that we need a lot of homes in California. We have a housing shortage, and so you need people to be able to insure their homes. So it's good that there is an option for them to insure their homes. On the downside, the fact that private insurance companies aren't willing to give them insurance coverage means that they are very high risk homes in those areas. And so the state is kind of subsidizing homes in very risky areas, which is kind of a dangerous thing, as we're seeing, like in the LA wildfires. The FAIR program is on the hook now for billions of dollars in insurance payouts, and that's going to cause problems for ratepayers across the state. So it's a partial solution, but it's not really a long-term safe solution. So other things we can do is insurers can incentivize people to harden their homes against extreme weather. So, like in California, if somebody clears space around their home from vegetation so that there's less risk of fire spreading to their homes, then you can reduce their insurance rates as kind of an incentive for people to do that. Or in the middle of the country where there's worsening hail, you can give people a better insurance rate if they get a metal roof on the top of their house instead of a less resilient roof. So things like that, encouraging people to harden their homes so at least we're less vulnerable to those worsening climate extremes. But right now, insurance companies don't do that very often. They tend to just say, well, you live in this area. In this area, the risk of extreme weather is so much, and so we're gonna, apply an insurance rate based on the area you live in, rather than so much based on the specifics of your home. And so there's some insurance companies are starting to change that. And so that's good. We need to see more of that to encourage people to harden their homes. We can also do wildfire management projects. I mentioned the Fix Our Forest Act is trying to make that easier to do, more expeditious. There's also a nice photo on the right here of goats going around, which is something we actually do here in West Sacramento. We bring in herds of goats in areas that have a lot of weedy vegetation that could potentially spread fires, and so the goats munch down the vegetation, and that's a nice way of reducing the fire risks in those kinds of areas. And I also like seeing the herds of goats walking around all the time. Another thing to consider is manage retreats in areas that are particularly vulnerable to extreme weather due to climate change. Either incentivizing developers not to build in those areas, or if people are already living there, potentially you can incentivize them not to rebuild there, but to build somewhere else. The challenge there being that, again, like we have a housing shortage, and so it's hard to limit places where people can build. And also, people are very attached to their homes and they want to rebuild in the same place. And so that's a challenging idea, but something that needs to be considered. And then, of course, the most important thing is to actually solve climate change, get our emissions down to net zero. And so that way, when global warming stops, then extreme weather stops getting worse and these damages stop getting worse. So that's kind of the most important thing. In the meantime, we have to take some of these other steps to minimize those extreme weather damages to our property. So now let's shift over to home electrification and efficiency stuff. So here in our homes, the two biggest sources of energy consumption are space heating and water heating. as you can see here, and those are also the two biggest sources of our fossil fuel consumption, which is anything other than the dark blue being electricity, light blue being natural gas. You can see we have a lot of natural gas space heating and water heating. That's particularly true in California. We have lots of gas heaters and water heaters. And so that's kind of a good place to target to reduce our both fossil fuel consumption and overall energy consumption. And so a good solution there is heat pumps, which use electricity to move heat from one place to another, and they can both heat and cool buildings with one appliance. They're super efficient, 3 to 5 times more efficient than most current fossil fuel heating systems because it's easier to move heat around than it is to generate it by burning stuff. Also, when you're burning stuff, you lose a lot of that energy heat to the surrounding air, so you're not, or it's the outside, so you're not applying it to where you want it to be, and so it's less efficient than a heat pump is. And so, because heat pumps are so efficient, they save energy and they reduce emissions. Even though today's grid is not perfect, we still have fossil fuels on our grid, but because heat pumps are so efficient, they still reduce emissions as the grid continues to get cleaner. And so, in the Inflation Reduction Act, which passed in 2022, we got lots of great incentives for people to electrify and make their homes more efficient. Rewiring America has a great calculator, which you can get to with this short URL, cclusa.org/IRA-calc. And you put in your information about your household, and it tells you the different incentives you qualify for, whether they're tax credits or upfront rebates, and how big they are, and so on and so forth. So, that's a great tool to learn about what you qualify for while the stuff is still in effect. So there are two categories of Inflation Reduction Act incentives. There's tax credits and there's rebates. The tax credits are still available as of now. It is possible that some of these will be repealed by Republicans in Congress as they're again looking for money to pay for tax cut extensions. And so, better idea to use these sooner than later if you can, but they are currently still in effect. If you use them, basically the next year's tax filings when you file your taxes. So, for example, if you were to use one of these this year, then in your 2026 taxes, you would say, in 2025, I did this thing to make my home more efficient or to electrify it, and then it will apply the tax credit to your taxes. So there is a 30% tax credit for energy efficiency home improvements that we'll talk about, 30% tax credit for solar and battery storage that we'll talk about, and also an EV tax credit that we'll talk about. The main program is called HERA. That's what I'm gonna refer to it as HERA. In California, it is applied through the California Energy Commission through a program called Tech Clean California. So that's where you can find it. It is currently in effect, although it sounds like it's basically first come, first served, and they're kind of running out of funds. So this is another thing where if you qualify for it, you want to get to it as soon as you can before they run out of money. And they are still applying it, even though there's been some bumps in the road getting the money from the Department of Energy. It sounds like they are confident in getting the money now, and they are accepting applications as long as the money before the money runs out. So you can get up to $14,000 per household. If you're a low-income household, which is under 80% of the local median income, it can cover 100% of your upgrade costs up to that $14,000. If you're a middle-income household, which is 80 to 150% of the local median income, then you get 50% of your costs covered up to that $14,000. You don't have to figure out if you're a lower middle income household based on the local median income. You can just plug your information into that Rewiring America calculator, and it will tell you which ones you qualify for. So that's why it asks for your zip code and things like that. Much easier than trying to figure it out yourself. There's a second program called Homes, which is just basically how you get somebody to come into your house and look at your energy efficiency before and after you do some upgrades, and they do some modeling and they figure out how much your home energy savings is, and then then you get rebates proportional to that, which I'll talk about in a bit. That is not currently in effect. The state is basically sending the information to the Department of Energy in April and trying to get approval to fund that, and then who knows what the Department of Energy is going to do, but that is not currently in effect. Hopefully, it will be in effect in the future, but we'll see what the Department of Energy does. So we'll go through the incentives one by one, starting with heat pumps. So HEHRA, if you qualify, has an upfront discount up to $8,000. Again, 100% up to $8,000 if you're low income, 50% if you are a middle income. So, for example, if you're a middle income household and you get a $16,000 heat pump, then you can get $8,000 rebates and it will cost you $8,000. There is also tax credit available to anybody, regardless of your income. And so then if you get a heat pump and install it, then you can basically get a $2,000 tax credit off your next year's taxes. And we got heat pump water heaters, same thing as space heaters, where they just move heat around to heat the water. Very efficient, 2 to 3 times more efficient than most current water heating systems, and that translates into energy and emission savings. So for those, HEHRA has a up to $1,750 upfront rebates. And so again, if you qualify for HEHRA and you get your application approved, and you say you're a middle income household, then if you get a $3,500 heat pump water heater, then you can get a $1,750 rebate off of it. And again, there is a 30% tax credit up to $2,000. And so if you get a $6,000 heat pump water heater, then you can get a $2,000 tax credit off of your next year's taxes. Then we got electric stoves, which are great. There's the two different kinds. There's like the traditional old school electric resistance stoves where you get the filament that heats up the middle element. And then you have more modern induction stoves, which transfer energy to your pot or pan through a magnetic field. Cool magnet science. We love induction stoves. Either way, it's much more efficient than a gas stove because gas stove just you're lighting the gas on fire and then a lot of that heat just dissipates into the surrounding air instead of going into the pot, and so it's less efficient. Induction stoves are also super fast, super accurate, and very safe because the cooktop surface doesn't really get hot, so you can put your hand on it and you don't get burned. Either way, they are much healthier because you're not burning methane gas and all the other stuff in that gas stream right in your face in your kitchen. So there's less indoor air pollution, which is particularly important for households with kids because there's been a lot of research that burning gas from your stove in your kitchen is bad for childhood health. So here there's no tax credits for electric stoves, but there is if you qualify for HEHRA, the upfront discount up to $840. Again, for the same thing, 100% for low-income households, 50% for middle-income households, up to $840. And then another cool appliance is a heat pump clothes dryer, which are very rare in the United States. I think fewer than 1% of households have a heat pump clothes dryer, but they're really cool technology. You don't have to vent anything to the outside. It's all enclosed. It's very, very efficient. I've heard that it takes a little bit longer to dry clothes, but it's very energy efficient. People who have them say they're really great. So if you can find one, and if you qualify for HEHRA, it's a good thing to consider. Again, there's no tax credits for heat pump clothes dryers, but there is an upfront discount if you qualify for HEHRA. Same as the electric stoves, up to $840 upfront discount there. And then home weatherization is a great thing to do. Basically, it's steps you can take to reduce the amount of energy required to heat and cool your home. Doing things like air sealing, improving insulation, upgrading doors and windows, improving ventilation, mostly things to prevent air from leaking in and out of your house. A good first step is to do a home energy audit where an expert comes in and looks at your home and does an assessment and figures out the most cost-effective things you can do to improve your home efficiency. And there is a 30% tax credit for that, up to $150. Again, currently still in place. So that's a smart thing to do relatively soon while that tax credit is still alive. And get that information about the best things to do to improve your home. It's a good thing because up to 20% of the money spent on home energy by average American households is wasted just from air escaping in and out. And so weatherization reduces energy waste and thus reduces energy bills, especially for low-income households because those tend to be kind of older, draftier homes. And so low-income households could save up to 35% on their energy bills through weatherization projects. So here again, HERA, if you qualify, will give an upfront discount for insulation improvements for air sealing and ventilation, up to $1,600 for low and middle income households. And then for everybody else, there is a 30% tax credits up to $1,200 per year. Against that $150 for home energy audits. You can also get $1,200 for insulation and air sealing, $250 per door up to two doors, and $600 for improving your windows. And this is a tax rate that resets every year. So like you could do a project to get $1,200 tax credit for insulation one year, and then the next year you can upgrade your windows, and the next year you can upgrade your doors, and you can kind of spread it out if you want to use this tax credit in multiple years, assuming the tax credit doesn't get repealed, which again we'll see what happens with that. There is also the homes program that I mentioned that is not currently in effect, but hopefully will come into effect, where you get somebody to come in and do some modeling, like a contractor with some expertise in this, and they figure out like energy efficiency of your home before and after these variety of upgrades. And then there is a rebate proportional to the amount of energy savings, as you can see on here. For example, if you increase your energy savings by 35% or more, you can get the lesser of $4,000 or 50% of your project costs rebated, which is a pretty cool program. If it goes into effect, hopefully it will. We'll see, but that's another option. Then we've got the EV incentives, both for new and used EVs. So there is a 75 up to $7,500 incentive for new EVs with they have to meet a bunch of criteria, like they have to be assembled in North America, and you have to earn under $150,000 or $300,000 if filing jointly, and then they have to get the critical minerals from the U.S. or free trade partners, and so on and so forth. But there's a list from the EPA, I believe, of EVs that qualify. And then you want to go to a dealership that will take that, that's basically signed up to take that tax credit, and then they can take the tax credit and just give you the money off of the sticker price so that you don't have to worry about applying it to your taxes because there's been some issues with that apparently. So the best way to do is find a dealership that is signed up for the program and will give you the upfront discount. As long as the EV tax credits are in place, which again, those are under threat from the current Congress, they've definitely got a target on their back. So if you're in the market for an EV, sooner rather than later is a smart thing to do. Same thing for used EVs. There is a tax credit of $4,000, most likely, or 30% of the sales price, but the sales price is probably going to be more than that. But you have to earn under $75,000 or $150,000 if filing jointly. The EV has to be at least 2 years old. The price can't exceed $25,000. It has to be the first purchase, the first transfer, I should say, of the EV. So you're buying it from the first owner, or at least from the dealership, because you also have to buy it from a dealership. So the dealership buys it from the first owner and sells it to you, and then they can qualify for the tax credit. But there are no like made in North America sourcing requirements. Every used EV qualifies for this one. And again, you want to go to an auto dealership that signed up for the program, and they will take the tax credit and just give you the $4,000 off of the sticker price. Again, while this tax credit is still in effect. So again, if you're thinking about buying a used EV, sooner rather than later is probably a smart thing to do. Then there is an incentive for EV chargers, 30% tax credit up to $1,000 from this tax credit if you live in a non-urban or low-income community. Rather than figuring out if you live in a low-income or non-urban community, again, just go to the Rewiring America IRA Savings Calculator and plug in your information, and it will tell you whether you qualify for the EV charger tax credit. Then we got the rooftop solar and battery incentives. Again, there's a 30% tax credit for rooftop solar panels, for battery storage if you want to get a battery storage system, and also for electrical panel upgrades if you're doing that in conjunction with getting your rooftop solar system. And so you can get basically, it's uncapped, so you can get 30% off whatever the entire cost is, and you can spread that tax credit to multiple years. So it's basically if you like have a $5,000 tax credit from this and you owe $2,000 and then $2,000 and then $1,000, you can apply that over 3 different years. So again, that is currently in effect. We don't know if it's going to stay in effect or if it's going to be revoked. So sooner rather than later is probably a smart thing to do here too. And then finally, if you're doing all of these things to electrify your home, then you may increase your electricity demand enough to require electrical panel and or electrical wiring upgrades. You want to talk to an electrician to figure out if that's the case. But if that is the case, then HERA, if you qualify, has an upfront discount for electrical panel costs up to $4,000 and electrical wiring upgrading costs up to $2,500. And there's also a 30% tax credit for those kinds of upgrades. So that's another thing to keep in mind. Make sure that you're not going to blow up your electrical panel or anything like that. So I will stop there and make sure Cheri has plenty of time to talk about the SMUD stuff. And this is my information, and you can join us at CCL if you're so inclined. And I think Edith is going to do a little bit of an introduction for Cheri. And then once Cheri's done, then we'll take some questions.
And Edith, if you'd like, I can go ahead.
Oh, yeah, that's probably a good idea.
Okay,
Considering I was on mute, that was kind of useless. So go right ahead.
No worries. Okay. Hi, my name is Cheri Davis, and I work at SMUD, and where I supervise SMUD's residential building electrification program. I'm sorry, I have my treadmill on. I'm going to turn it off. I was using my treadmill to warm up because I'm really cold in my house right now. So I come from over 25 years of experience in the energy policy and energy program space. I worked for about the first half of my career at the Energy Commission, working on energy policy, and then I also worked briefly at the Air Resources Board, where I helped write the electricity chapter for the scoping plan, which was really exciting. And then I got the job at SMUD. And I was kind of in the unique position of having to develop programs that complied with the policy document that I just put in place. Because one other tidbit is that I have an older home in Curtis Park, built in 1910, and I have fully electrified it, including solar. And I can definitely attest to the savings on the energy bill and increased comfort. And the fact that it was cold in my room, in my house, should be no reflection on that. It's just that I didn't have the heat on today. All right, so I will share my presentation here. Oops, I have to send a request to share.
Let me work on that right now.
Okay, thanks. Okay. Now I have the option. Can everyone see my screen?
Perfect. Perfect.
Great.
Yeah.
All right, I'll be speaking mostly to SMUD's residential building decarbonization rebates. I threw together a last-minute slide during this other presentation about our electric vehicle rebates as well. I won't go through this whole slide. This is our standard slide of talking about SMUD, but I did want to highlight SMUD's commitment to being 100% zero carbon by 2030, the most ambitious goal of any large utility in the United States. And that refers primarily to how we're producing our electricity. And we're also working to decarbonize homes and businesses within our territory. The idea is that if you go from gas to electric, and then that electricity is carbon free, then your house is also carbon free. So SMUD's residential building decarbonization rebates, we provide incentives for customers to convert from gas equipment to electric. We also have rebates for customers going from electric to, say, a new heat pump, but the rebates are much smaller. The first program, and I'd say the biggest program, is our Advanced Home Solutions. It provides rebates for heat pump HVAC systems, heat pump water heaters, sealing and insulating the attic, and panel upgrades. And the graphic on the right just gives you an idea of how fast we have grown the program. with 2023, 2024 being heavily influenced by the tech and hero rebates. Participation in our advanced home solutions requires that you use a contractor from the SMUD contractor network, and I will talk a little bit about that later. We also have appliance rebates for induction cooking. So first, our advanced home solutions, the heat pump HVAC rebates. We offer rebates up to $2,000 for a variable speed system, $1,000 for a two-stage package. Actually, that package should not be there, a two-stage HVAC system. And then if you're converting from a standard electric to a heat pump, or even from an old heat pump to a new heat pump, you'll be eligible for $500. I won't go into this will probably take too long, but the benefits, I have slides on this and I can share them later about the benefits of heat pump HVAC systems and some myths and facts about them as well, because some of the older systems were not that impressive, and the technology has come a long way. Our heat pump water rebates are divided by the size of the tank. So they range from $1,500 for a 50-gallon up to $2,500 for an 80-gallon. And the reason why we offer a higher rebate for a larger size is partially because it's more expensive to get a larger size system. But also when we just had one rebate, we started off with just one rebate for any size, we found that contractors tended to install the smaller size, like a 50-gallon for larger homes, and that really was not a good fit. And so we decided to right size the rebate and encourage contractors to really size that system appropriately. And then we have a $500 rebate for customers going from electric to a heat pump water heater. Same thing, I'll skip over this one. We also offer some other rebates. The first one being the seal and insulate up to $3,000. This rebate, Dana already talked about the fact that sealing and insulating your home is really important, and we want to make sure that it's done right. It's not just about installing insulation. We call it that. There's a lot of contractors will just do the blow and go. They're just taking out the old stuff, putting in some new stuff, and the problem is if they don't properly seal the attic, then air will come in. And if you've actually seen pictures of insulation that's been put into an attic that was not well sealed, over the years, that insulation becomes black because the dirty air is just passing through that insulation. So we really advise that customers seal their attics first. And it is more expensive, so that's why it's important to offer a substantial rebate. We also have a Go Electric bonus up to $2,000, and that is for replacing your panel and or upgrading all of your circuits so that your home is all electric ready. And you're eligible for that only if you have participated in our HVAC rebate or our heat pump water heater rebate. Next, I'll talk about the SMUD contractor network. The idea is to connect customers with contractors that have been vetted and are eligible and familiar with our rebate program. And I'm not going to go into all of this because I think it would take too long. The website is smudcontractornetwork.org. And when you first go onto the site, it'll ask you if you want to find a contractor for your home or for your business. And presumably you're going to choose home. And then you'll see this search panel on the left there. We're actually migrating to a new system shortly that will offer a lot more options. But you can search for whatever system you're looking to replace. We'll have information about what kind of contractors that offer financing. And once you choose your search parameters, it's going to show you the top 3 contractors. And it's actually a random, we call it a lottery system. Contractors receive scores based on the number of jobs that they do. We send out customer surveys, and so we incorporate that into this contractor score as well. And they basically get more tickets the higher their score is. And then we do a random drawing each time someone does a search, and it shows your top 3 contractors. So those are not necessarily the contractors that scored the highest. It's more just that the higher scoring contractors are more likely to be in that top 3. If you look at the bottom there, the bottom arrow, you're going to see where you can look at all 14 results in this case, or see the next three results. Are there any questions on this or anything I've gone over so far? And I can't see the chat.
I think you're good so far.
Okay, great. So the way you would participate in the Advanced Home Solutions program is you would choose a participating contractor from the SMUD contractor network, install the qualifying equipment, and the contractor should know what qualifies. And then your contractor will provide the rebate application for your signature. And we really encourage contractors to offer an instant discount to the customer, meaning that the contractor actually receives the rebate in lieu of the customer, and the customer doesn't have to wait for that rebate check. Now for an induction rebate, it's pretty simple, $750 if you're going from gas to electric. And we do require that the customer provide a before and after photo. In the case of the Advanced Home Solutions rebates, we're working with our contractors who are accountable to the program, and so they will provide information about what was installed before. For the appliance rebates, it's really you're applying for that rebate, and so you need to provide the before or after photo. And then we have our electric to electric rebate of $100. Any question on that?
I think Edith had one in chat. Are there any income requirements like there are with rebate?
There are no income requirements for this. And I will have a page on our lower income programs shortly. How induction works, I don't know if we have time to go over this or not. Edith, do we have time?
Sure, we've got another 15 minutes. Go ahead.
Okay. So really quick, the way induction works is an electric current goes through a coil that generates a magnetic field. The induction ready or magnetic cookware then generates heat, and the hot cookware cooks the food. It's very efficient because gas, believe it or not, the primary way that gas heats your food is it's heating the air around your pot, which is then heating the pot. It also heats the metal grate underneath, but it's primarily heating the air. And that's why your kitchen gets so darn hot when you're cooking with gas. And I'm sure we've all experienced that during the summer. It can be pretty miserable. That's also why the pollutants are such an issue, because any pollution associated with that gas burning is just going straight into your face. The benefits are it's much faster. It will heat water nearly twice as fast as gas or standard electric. It's much safer, as Dana spoke to, healthier, easier to clean, much more precise, and cooler kitchen. There's other benefits as well, but those are the highlights. And I'm sorry, this is very grainy, but I was quickly grabbing this from the SMUD website. So we do have rebates for electric vehicles as well. You can get up to $1,000 towards EV charging equipment and installation costs. And then we also have a demand response program called Managed EV Charging. And basically you sign up and you have this app that controls when your EV is being charged, and it will help SMUD to manage our load, which is particularly important as we're going to zero carbon because as you might imagine, that includes a lot of renewables, and with renewables not being something that you can just schedule when you want those renewables to turn on, we really rely on demand response programs to help manage our load. And I just wanted to provide this slide because we have an advanced home solution hotline, and we have two people who run that program, and they are just fantastic. If you have any questions about participating in our programs, this is where you want to call. Oops, sorry, that made my face very red. I'm going to go now to, actually, I'm not sure how to get there. I wanted to go to the other page, and I can't find the Zoom link. I'm going to stop share. There we go. Okay. This is information about our low income program. This is not a program that I run, so I'm less familiar with it. First of all, we do have an energy assistance program rate, so that's for low income customers. And we have a medical equipment discount rate as well. Energy saver bundles for customers on APR. So there's certain products that renters can get, like a power strip, a fan, or LED light bulbs. Renters also qualify for the same things, and they may qualify for insulation and minor energy efficiency upgrades as well. And then if you're a homeowner, they are eligible for heating and cooling repairs or replacements. And that does include possibly a new heat pump water heater, and an induction stove. So it's pretty generous. And as you can imagine, we do get a lot of applications for these. And sometimes we run out of money, but right now we're doing good beginning of the year. I think that wraps it up.
Cool. Thanks, Cheri. And we do have a couple questions, and if anybody else has questions, you can just type them into the chat, and then we'll do our best to answer them. And so there's a couple questions about the SMUD rebates. Edith was wondering where the funding comes from for the SMUD rebates, and is any coming from the federal government?
None of our funding, thank goodness, right now is coming from the federal government. We do stack our rebates on top of other rebates. And so when the tech program's there, when the HEROES program's there, the combined total can be quite substantial.
So just as another question, so for example, PG&E doesn't offer the extensive program that you have. What is the benefit to SMUD? I mean, why aren't other utilities doing this as well?
That's what I was going to ask too, as a PG&E customer. Why is SMUD so much more generous than PG&E?
I guess I don't have a great answer for why other utilities aren't doing this, but I will say that, first of all, we are very fortunate in that we have a board of directors. We're community owned. We don't have we don't have shareholders, so any money that we earn goes back into our programs. That's part of it. Also, another part is that we are not governed so much by the CPUC. So if we want to do a program, we can run a program. We don't have to go through the same level of effort that other utilities have to go through to justify a program for regulators. So we're extremely lucky. The way we can justify these generous incentives is it's a combination of we're kind of getting three value streams out of this. We're getting energy efficiency, which we're required to do anyway. We're getting increased revenue because we're getting customers to go from gas to electric. We just sell electricity, so if customer goes from gas to electric, that's more for us. And then we also get the carbon offset benefits. And so when you take those three value streams together, it's worth money for us. So we pass that money on to our customers.
Very
Again,
interesting.
because we don't have shareholders.
And it's going to help you get to your zero uh, carbon goal in, yep, 2034, 5, yes.
2030.
Is it?
Our goal is 2030, zero carbon by 2030.
Wow,
Thank you.
ambitious.
It is ambitious, yes.
Let's see. And then you mentioned something about heat pumps working well in Sacramento, and Benjamin noted that, or asked if heat pumps are more popular in much colder places like Maine, so then they should be more than up to Sacramento winters. And yeah, on the question of cold weather, there are specifically cold weather heat pumps that are used in colder climates. Like, yeah, Maine is being very aggressive and have really good incentives to encourage people to switch to heat pumps, and also Nordic countries like Sweden and Norway and Finland have a lot of heat pump deployment there too. So technology has gotten really good for cold weather. And yeah, and do you have any comments on working in Sacramento, Cheri?
Yes, the reason I showed that we had two different rebates, one for a variable stage system and one for a two-stage system. The reason why we have that difference is that we really think that variable stage systems are so much better at providing heat. If you get a two-stage system, you're probably going to need to have backup heat strips. And those backup heat strips use a lot of electricity. With a variable stage system, you are probably not going to need those. And my system, for example, does not have any backup heat. And so it's all heat pump.
And so can you explain the difference between the variable stage and two-stage heat pump systems?
Yeah, so single stage is on or off. And that's probably the system that most people are familiar with. Like the air conditioning comes on and you feel cold, you feel nice and cool, and then you get cold, and then it turns off, and you slowly get hotter and hotter until your spouse tells you you need to change the temperature on the thermostat. A two-stage system has a high and a low setting, and so that avoids some of that on again, off again experience. So it's running at a low speed. Variable stage systems are running all the time in the background, usually at a very, very low speed. They can go much lower. They can also ramp up much higher. By ramping up much higher to basically the rotations per minute, the RPMs, that's how you deliver your enhanced heat, is through the higher RPMs.
Hmm.
And what it's doing is it's just modulating, going up and up and down in order to meet your temperature requirements. And so you're really not going to experience that variable hot, cold thing that you do with a single stage system.
Cool, thanks. And then Kathy's got a couple questions. First, she asked if one can qualify for both the SMUD and federal rebates, which I think you said, yeah, you can kind of stack them on top of each other and get both of them, which is a very nice benefit. And then she asks, could the federal rebates be revoked even if they're available when the improvements are made? So not the rebates, certainly, because the rebates are just, it's money sent from the Department of Energy to the California Energy Commission. And the California Energy Commission is being very careful now not to let people apply, or not to let people sign up for the program unless they've actually got the money, because the money has been inconsistently transferred from the Department of Energy, but they seem confident now that they'll at least get this kind of tranche of money. So if you qualify, if you submit an application and qualify for the HERO program, the Tech Clean California program as a lower middle income household, then you can be confident that you're going to get that money, or your contractor is going to get that money and take it off of your cost. The tax credits are a little tricky because hypothetically Congress could retroactively revoke them, but Congress usually doesn't do that because they don't want to penalize people who have already applied for or qualified for a tax credit. So if they revoke the various home electrification and efficiency tax credits, in all likelihood, it'll just be going forward. And so if you have done a efficiency or heat pump or solar or battery storage program this year, for example, and qualified for a tax credit, it should be safe. Can't guarantee that it will be safe, but it should be safe. And, hopefully we can convince Congress to keep those programs in place in the future. But we'll see what they do. They're a little unpredictable right now.
I will say that it can be hard to find a contractor that offers all those incentives because they've been very difficult to apply for, and there have been some abrupt cutoffs of the funding because basically it becomes oversubscribed or completely subscribed.
Mhm.
And sometimes there's not sufficient notice. And so there's a lot of contractors who feel like they've been burned by these programs. And it can be very difficult to find a contractor that will offer all of those incentives.
Yeah, that's interesting because I know the California Energy Commission paused the HERO program or the Clean Tech California program because they weren't getting the money in time to send it to contractors. So that would make sense that contractors would be feeling cautious about participating in the program going forward. So that's a good piece of information that you'll have to find a contractor who's willing to actually do the project and try to qualify for those rebates. Interesting. So we've got a couple minutes left. If anybody has any more questions, I think we've answered all the ones in the chat so far.
Well, Cheri and Dana and all of the participants, thank you very much for giving up part of your evening to sit in and join us for this discussion. And Cheri, thank you very much for joining us. We're quite delighted to be able to offer information directly from SMUD instead of us, interpreting what's on the flyers. So we do pass out SMUD information when we're tabling. We have boxes of your brochures, which we do distribute because we do think it's a really important program in our local area.
Well, thank you for doing that.
Yeah, no, thank you. Um, anyway, one last chance. Anybody got questions? Thank you for coming this evening. And again, Cheri, Dana, thank you for speaking. And Benjamin, thank you for running the technology in the background.
Bye.
Absolutely.
All right.
Yeah, thanks, Cheri.
Good
Nice.
night,
Nice.
everyone. Thanks a
Have a
lot.
good one.